Good morning, students. So, students, welcome you all once again on the another topic in financial reporting of CA Final. So, students, today we are going to talk about a very interesting and very important standard, which is Ind AS 41 Agriculture Standard. If I talk about this particular standard, you guys have never heard about the agriculture accounting, right? Because this kind of agriculture accounting was not there in India in our old accounting standard. So you guys have not read any agriculture accounting and reporting related standard in your CA Inter or IPCC curriculum because it was not there. And of course, irony of the India is an agriculture based economy, but we don't have any accounting standard on agriculture accounting, right? But in Ind AS, we have Ind AS 41, which takes care of agriculture accounting standard. Why we have this kind of a standard in Ind AS? Because we are aware that Ind AS are the converged version of IFRS applicable to India. Since in IFRS, there is a standard called IAS 41, and that is why we have Ind AS 41, right? So in accounting standard, there is no accounting standard on agriculture accounting and reporting. In Ind AS, it is Indian Accounting Standard 41. In IFRS, it is IAS 41. These are the status of the standards on agriculture in Indian GAAP, in Ind AS, and in IFRS. Okay. So let's read this interesting standard. So friends, I will also show you a live annual report of a milk producing company, in which I'll show you the entire applicability of Ind AS 41 with the help of the financial statement, so that you will be able to understand, you will be able to figure out that how this standard is getting practically applicable in industries also, right? I can see a lot of students have joined. So good morning, Mansha, Selesh, Tanisha, Tariq, Shruti. Good morning. So Mansa is saying, but sir, agriculture income is exempt under Income Tax Act. Okay. So Mansa, not the entire agriculture income is exempt. There are some limits, there are some thresholds, right? And when we getting deeper into this standard, we understood what is the accounting. So I am talking about accounting, Mansa. For example, donation. If you are giving a donation, it might be exempt under Income Tax Act. You might be getting deduction, but of course you will do the accounting. You will do the reporting. Okay, CSR. So you have to do the CSR calculation. You have to make a CSR accounting entry. You have to show it into the face of the P&L. You have to make some disclosure as per Schedule 3, right? So likewise, I am talking about accounting and reporting, right? So in our old accounting standard, there was no standard on agriculture. The only guidance was given in Income Tax Act regarding the agriculture income. Okay. So the accounting is different. The taxation is different. If something which is exempt in taxation, it does not mean that the accounting will not be there. The accounting will be there. Okay. Understood? Okay, so in this particular standard, we are going to talk about objective and scope. We are going to discuss objective and scope, why this standard has been issued, what is the scope of this standard, and the scope is much wider than only agriculture, which you are thinking of, right? Might be after reading the title of this standard, might be you are thinking that we are going to talk about trees and plants, right? We are going to talk about wheat, rice, paddy, match, cotton. So no, the scope is much larger and much bigger than what you are thinking about. Then we will touch upon some definitions, again theoretical part. The most important part is recognition, measurement, how to recognize gains and losses, when the gains and losses will recognize, and also government grants. Sir, but there is a separate standard on government grants, which is Ind AS 20. Then why this government grant is covered here? So this government grant is a very specific government grant which is related to agriculture related items, which is related to biological asset. So if the government grant is given by the government, if the company has received the government grant in relation to the item which are covered in agriculture related standard, then only that government grant will be covered here. Otherwise, all the government grant are treated as per Ind AS 20. Have you covered Ind AS 20? No? Okay. Disclosures. Then we are going to discuss some disclosures. So this is the major accounting part, right? This is the major accounting and reporting part. You remember, I have talked about four pillars of accounting: recognition, measurement, presentation, disclosure. Yeah. Are you able to recall about RMPD, recognition, measurement, presentation, disclosure? Okay. So let's move on. First of all, why this standard has been issued? What is the objective of this standard? So like other standard, every standard has some objective, every standard has some purpose, right? The objective of this standard is to prescribe the accounting treatment and disclosures for agricultural activity. So this standard talks about the accounting treatment. This standard talks about the accounting treatment, right? What is the accounting treatment and what are the disclosures for agricultural activity? We need to understand what is meant by agricultural activity. So this standard talks about treatment, accounting treatment and disclosures of agricultural activity, right? Agricultural activity is not limited to plantation. It is not limited to the trees and plants. It also includes like poultry farming. It also includes cotton farming. It also includes your fishing. Fish farming, I can say. It also includes milking a cow. Okay. So these things are also covered under agricultural activity. This is an agriculture segment. And the four key critical issues are addressed by Ind AS 41. What are the key critical issues? So when this International Accounting Standard 41 was drafted, it was addressing four key critical issues. And same, this Ind AS 41 is replica of IAS 41. There is no carve out, no carve in, no removal of option in Ind AS 41. It is cut copy paste like IAS 41. Number one, this standard talks about when should a biological asset or agriculture produce be recognized on the balance sheet. So this standard is covering when a biological asset or agriculture produce be recognized on the balance sheet. What is meant by biological asset? So biological asset means living animal or plant. So this standard deals with the agricultural activity deals with animal as well as plants, or I would say plants as well as animals, right? So what is my biological asset? My biological asset definition is biological asset is a living animal or plant, right? What is meant by agriculture produce? Agriculture produce means output which is coming from a biological asset. For example, if cow is a biological asset, what is the agriculture produced from cow? What is the agriculture produced from cow? Yes, you are right. Milk. Milk is the agriculture produced from cow. Okay. Mango tree. If mango tree is a biological asset, what is the agriculture produced from mango? Sorry, what is the agriculture produced from mango tree? It is mango. It is mangoes, right? Correct. If rubber tree is a plant, it is a tree, it is a biological asset, it is a biological asset, then what is the agriculture produced from this rubber tree? Latex, that gum, right? That latex which is used for the manufacturing of rubber, right? So this standard talks about biological asset recognition and agriculture produce recognition. Okay, biological asset recognition and agriculture produce recognition. Second, when you say Sir, I need to recognize this biological asset. Sir, I am a company which is into the trading of milk, and I'm like Amul, Prague. You must have heard about Amul, Mother Dairy, Parag Milk, right? These are the big companies. So these companies are dealing in this manufacturing and trading of milk, right? Now the question is, so I am getting a milk from the cow, let's say 1000 liter of milk, right? So milk is kind of an inventory. It's a agriculture produce. So this standard talks about when should this agriculture produce should be recognized in the books of accounts. Now, when you talk about the recognition, the second question comes, what is the value? If you are getting 10 liter of milk from a cow, what is the value out of that? You are not giving money back to the cow. You are not saying that to cow that see, you have charged 50 rupees to me, right, for giving me 10 liter of milk. So the per liter of milk cost 5 rupees. You cannot say that. Now, the second issue which was addressed by this particular standard, at what value should a recognized biological asset or agriculture produce be measured? So the first question talks about recognition, right? So this standard talks about recognition of biological asset and agriculture produce. The second question talks about measurement, right? At what value this biological asset and agriculture produce is going to be measured. Third, how should the difference in value of a recognized biological asset or agriculture produce be accounted for between two different reporting dates? This standard also talks about subsequent measurement, right? For example, you have purchased a cow on, let's say, 15th January 2023. So what is the value of this cow on 31st March 2023? And if there is a change in the values, change in the fair values, then how should this difference or change in fair value has to be accounted for? Actually, this is a very unique standard where it talks about the measurement on the basis of fair value. When we will go deeper into this standard, you will realize the property, plant and equipment standard, the intangible asset, the investment property standard, inventory standard, these standard were talking about the recognition of asset on the basis of cost at the time of initial recognition. At the time of subsequent recognition, for PPE and intangible asset, you have a revaluation model. You can opt for. Either you can continue to recognize with cost model or revaluation model. In investment property, this revaluation model was not allowed. In inventory, you have to recognize and measure inventory initially at cost, and at the reporting date, it is cost or NRV, whichever is lower. But Ind AS 41 is the unique standard where it talks about the initial recognition and subsequent recognition at fair value less cost to sell. So it talks about fair value only. It talks about fair value, right? So when you initially recognize, the fair value was, let's say, 100 rupees. Subsequently, on the reporting date, it becomes 150 rupees. So what is the accounting treatment of this mark to market? 50 rupees. Okay. So this standard also talks about subsequent measurement. So recognition, measurement, and this standard talks about the disclosures, right? So this standard talks about the accounting treatment and disclosures for agricultural activity. In short, this standard covers recognition, measurement, presentation, and disclosure, RMPD. This standard covers the RMPD, recognition, measurement, presentation, and disclosures of agricultural activity, right? Let's discuss the scope of this standard. Scope of this standard. Mansa is asking, can this disclosure be part of ESG sustainability reporting? Mansa, this is a different disclosure. So just to reiterate or just to share my thought, although this is a very different question, but ESG sustainability reporting is something which is different than your financial statement reporting. Your financial statement reporting comes from the Indian accounting standards. Okay. For example, if you are an agriculture company, right? So you will you will do all your accounting and reporting as per Ind AS 41 and as per other standards also. Okay. But sustainability reporting is a different aspect where it takes some data from the financial statement, but not the every data from the financial statement. So it is wrong to say that the entire disclosure of Ind AS 41 will be part of the sustainability reporting. Yes, few data may be there which may be a part of the sustainability reporting. For example, Amul Dairy Limited is a company and Amul takes care of 5,000 cows. Okay. So probably it is kind of a in ESG it is comes as a kind of a social activity. Okay. So likewise, but we cannot say that the entire disclosure of Ind AS 41 is a sustainability reporting disclosure. Okay. Good question. Different than Ind AS, but good question. Coming to the scope part, sir, we understood why this standard has been issued. So this standard has been issued to take care of recognition, measurement, presentation, and disclosure of agricultural accounting, agricultural activity. Where this standard is applicable, this is the most important slide. This standard shall be applied for the following when they relate to the agricultural activity. This standard is applicable for three items. Number one, this standard is applicable to the biological asset. What is meant by biological asset? Biological asset is a living animal or plant. Tanisha, it is not plant or animal. It is living animal or plant. If a plant is dead, if an animal is dead, it is not a biological asset. Okay. So it's a living animal or plant. So it applies to biological asset when they relate to agricultural activity. Right. So this standard shall be applied for the following. This standard shall be applied for biological asset, for agricultural produce, for government grant. But this will be applied only when it will relate to the agricultural activity. Sir, biological asset means living animal or plant, right? So plant, we understood it is related to agricultural activity, but let's talk more about the animals, right? For example, have you seen any circus in your childhood, in your old days? Have you seen any circus? You must have seen circus. In circus, you must have seen they are using animals to entertain the audience, right? Like this monkey is riding bicycle, or the goat is riding bicycle, monkey is sitting on the bicycle, the tiger or lion is jumping in the rings of the fire. You must have seen the animals are acting in the circus, right? Of course, these are the living animal. So can these animals, which is purchased by the circus or event management company, can these animals be covered under Ind AS 41? Can these animals covered under Ind AS 41? Whether these animals are related to agricultural activity? Answer is no. These animals are related to commercial activity. These animals are entertaining the audience, right? These animals are entertaining the audience. These animals are not related to agricultural activity. This circus is no more agricultural activity, right? So the biological assets will be covered under Ind AS 41 only when it is related to agricultural activity, right? Second, you guys must have attended so many weddings, right? In the weddings, you must have seen that the groom is coming on horse or mare, right? And this horse or mare is provided by the event management company, right? You must have seen that buggy, ghodi, you must have seen that, right? So, so whether these animals, this horse or mare, so whether these animals are covered under Ind AS 41, whether wedding is an agricultural activity, wedding is not agricultural activity, right? So the event management company, which is maintaining these animals, which have acquired these animals, which have acquired the horse, mare, So these animals are not related to agricultural activity, right? The event management company has purchased these animals for the purpose of commercial activity, right? So they provide these horse or mare to in the weddings for the groom, and they are charging 10,000 rupees, 15,000 rupees, 50,000 rupees for a single event, right? So it is not related to agricultural activity, and hence these event management company will not do Ind AS 41 accounting, right? Will not do Ind AS 41 accounting. Clear? I hope it is clear to everyone, right? Biological asset means living animal or plant, and normally the problem comes in with respect to animal. If animal is not related to agricultural activity, then it will not be covered here. Sir, then where it will be covered? It will be covered in most probably Ind AS 16 property, plant and equipment, right? Agriculture produce at the point of harvest. Agriculture produce at the point of harvest. Does it mean? Agriculture produce at the point of harvest. Does it mean? For example, this is a mango tree. This is a mango tree. Okay. These are the mangoes. This is a mango tree. Now, of course, this is a mango tree. So mango tree is a biological asset. It's a plant. It's a tree. And so many mangoes are lying on this mango tree. Let's say 100 kgs of mangoes. So mango is the agriculture produce. Mango is the agriculture produce. But this agriculture produce will come under Ind AS 41 only at the point of harvest. If these mangoes are lying on the tree, it is not an agriculture produce. But at the time when these mangoes are plucked, and these mangoes are stored in a bucket. These mangoes are plucked, right? So the day when these mangoes are plucked from the tree, then only it becomes agriculture produce at the point of harvest. What is meant by harvest? When you are detaching, when you are separating the agriculture produce from the biological asset. When milk will come under Ind AS 41, when milk is extracting from cow, right? When milk is getting harvested from cow, detached from cow, then only it becomes agriculture produce at the point of harvest. So agriculture produce at the point of harvest will be coming under this standard. After harvesting, it will go to another standard. For example, when these mangoes are plucked, it is covered under Ind AS 41. After that, it will go to Ind AS 2 inventory standard, right? So we'll talk more about that. But is it clear so far? One, a biological asset when it is related to agricultural activity will come under this standard. Second, agriculture produce at the point of harvest will come under this standard. Third, government grant related to biological asset, related to agriculture produce is also covered under this particular standard. For example, government is providing a grant to the company for, let's say, there is a shortage of wheat in the company for in the country, for example. So government has come up and government told that if you produce minimum 5,000 kgs of wheat, we will give you a grant of 5 lakh rupees. So this grant is related to agricultural activity. Or government is saying, if you, since the production of milk is getting down in the country, so if you will, engaged in the this milking activity or maintaining the cows, you will feed the cows with a hygienic food, healthy foods, right? And if you will engage in these kind of dairy activity, so we will give you a grant, right? So again, this is a kind of a government grant relating to this agricultural activity. So three items are covered in this standard: biological asset, agriculture produce at the point of harvest, and government grant, right? Clear, guys? So let's move on. So we spent so many times, so we have spent so much time in objective and scope. So we discussed that this standard is applicable on biological asset, applicable on agriculture produce at the point of harvest, and it is also applicable on government grant. This standard does not apply. Now there is a negative list where this standard does not apply. Sir, The land on which the agricultural activity is going on. Of course, you need a land for doing an agricultural activity. Sir, whether the land is covered under Ind AS 41, answer is no. The land is either investment property or a property, plant and equipment, right? Bearer plant. Bearer plant. You remember in Ind AS 16, I have covered a concept of bearer plant. What is meant by bearer plant? Bearer plant means those trees which are producing the agriculture produce for more than 1 year, right? Bearer plant are those plant which produce the agriculture produce, which produce the output for more than 1 year. Means those trees, those plants which provide the fruits, vegetables for more than 1 year. Mango tree. Whether mango tree is bearer plant or not. Whether mango tree is bearer plant or not. Whether mango tree is bearer plant or not. Mango tree is, yes, bearer plant because it produces the mangoes not only for 1 year. It produces the mangoes for more than 1 year, right? So then it will be covered under property, plant and equipment standard. Okay. So PPE standard, when I discuss this PPE standard, so I discuss the concept of bearer plant also. Bearer plant is covered under Ind AS 16 PPE because the definition of PPE is tangible asset. Of course, three are the tangible asset which are used for production, goods or services, right? And which is held for more than 1 year. So if a bearer plant, if a biological asset, I mean to say bearer plant, if a tree is giving goods or services, is giving fruits or vegetables for more than 1 year, it will be covered under Ind AS 16 property, plant and equipment. Like apple tree. Apple tree is giving apple for more than 1 year. Rubber tree, it is providing latex for more than 1 year, right? Then your coffee tree, tea tree. This life of this tea and coffee tree is close to 70 year, 80 year, 90 odd years, right? So these are the bearer plant. These are bearer plant. And bearer plant, of course, it's a biological asset, but it is a bearer plant, so it is covered under Ind AS 16. It is not covered under Ind AS 41. Right? But the output on this bearer plant, like your mangoes, apple, tea leaves, rubber leaves, tea leaves, coffee leaves, latex. So these are covered under Ind AS 41. So the output of these bearer plant covered under Ind AS 41, but the bearer plant is not covered under Ind AS 41. It is covered under Ind AS 16. So mango tree is covered under Ind AS 16, but mangoes are covered under Ind AS 41, right? Government grant related to bearer plant is also not covered. So land is not covered. Bearer plant is not covered under Ind AS 41. If government is giving a grant for plantation of mango tree, rubber tree, tea, coffee, rubber tea, coffee, apple tree. So these are the bearer plant. And if the bearer plant is not covered under Ind AS 41, then the government grant related to these bearer plant are also not covered under Ind AS 41. Sir, where it covers? It covers under Ind AS 20. Intangible asset related to agricultural activity, right? So if the farmers are using some technology for the agricultural purposes, they are using some formula, they are using some technical know-how for agriculture. So these kind of intangible assets are also not covered under Ind AS 41. It is covered under Ind AS 38, right? Agriculture standard. Right of use asset. If a farmer which has acquired a land on a lease basis, of course, the farmer or this company is giving the rental to the lessor, right? But this company will recognize a right of use asset. Okay. So this right of use asset related to a lease of a land related to agricultural activity will also not be covered under Ind AS 41. it will be covered under Ind AS 116. Okay. Agriculture produce after harvest. So agriculture produce after harvest. So this standard is applicable to agriculture produce only up to the point of harvest, and thereafter Ind AS 2 or other standards shall be applied, that is Ind AS 16. Right. So friends, for example, there is a mango tree. The company like Nestle has a mango orchard. So they have mango trees. So these mango trees are covered under Ind AS 16 because they are the bearer plants. But when the Nestle is plucking these mangoes, at the time of plucking, these mangoes become the agriculture produce under Ind AS 41. They are recognized, they are measured as per Ind AS 41. But subsequently, it will no more under Ind AS 41. Immediately after plucking, it will become an inventory. It will become an inventory and it will be covered under Ind AS 2. So I will explain this concept with the help of an example in the Excel file. Okay. Friends, few of you are asking if the animals are using for the transportation purposes, like bulls are used for transportation purposes. Is it covered under Ind AS 41? Answer is no. It is not covered under Ind AS 41. Right. Another student is asking, sir, although animals are used for the commercial activity like circus, like weddings, right? But these are the animals. Then why it is not covered under the Ind AS 41? See, you remember the asset could be a one asset, but the accounting always depends on the usage of this asset, on the use of this asset, on the intent to use this asset. For example, Tanisha, you have a building, right? Now, if I'll ask you, being a chartered accountant, if I ask you, Tanisha, what is the classification or presentation of building in your balance sheet? What could be your answer? What could be your answer? What is the classification of this building in your balance sheet? Tanisha, what could be your answer? So Rahul has replied, sir, it is a property, plant and equipment. Is that right answer? Answer is no. So if you will reply like a student, probably you can reply, sir, it is a PPE. But you know, in CA final, you are just like a chartered accountant. Tanisha is also saying PPE. While learning, while learning the subjects, while reading these subjects, you're not a CA final student. You will be a chartered accountant. You will thinking like a chartered accountant. See, how could I respond to this question? If this question is asked by an interviewer in interview, see, how should I respond to this question? I would say, if a company is using this building, this is the same building, and see my answer. If a company is using this building for the purpose of running its office or for the purpose of manufacturing, right? So if the company is using this building if the company is using this building for its business purposes, it is a PPE. It is covered under Ind AS 16. Second, if the company is using this building for rental purposes, or company has just keeping idle this building for the capital appreciation purposes, then it will be an investment property and it is covered under Ind AS 40. Third, if the company is decided to sell this building and it is meeting the criteria of, you remember ISPC and HP, it is meeting the criteria of held for immediate sale in present condition and sale is highly probable, then it will be classified under non-current asset held for sale under Ind AS 105. Fourth, if the company's intention is to trade in this building, if the company's business model is to purchase and sell the building like a property brokers, then it will be an inventory. Rahul and Tanisha, have you understood the way I have answered for this building? Have you understood? This is the same building, but I've given 4 answers to this building. But building is same, animal is same. One, when animal is used for entertaining the audience, it becomes a commercial activity and covers under Ind AS 60. When this animal is used for agricultural activity, it becomes Ind AS 41. So friends, it's not the asset, it's the intent and use of the asset in the business, right? That derives the accounting treatment. I hope you guys have got the answer. The same car is inventory for Maruti, but the same car is a fixed asset, PPE, for Infosys, for TCS, for Reliance, right? I hope you guys have got the answer. I hope Tanisha, you got the answer. Nivetha is asking, sir, can we say Ind AS 41 applies to biological asset except bearer plant? You are right, Nivetha. So I have a flow chart. I have a chart where I will discuss the exclusion and inclusion to summarize this concept, right? But you are right. Okay, friends, shall I move forward? So before that, let's talk more about this agriculture produce after harvest. What happens once these mangoes or apples are plucked from the tree, right? What happens after that? After that, it becomes your Ind AS 2 in inventory accounting, right? So friends, let's move on an Excel file and please confirm if my Excel file is visible to all of you. Whether my Excel file is visible to all of you? Yeah. Is it visible? Okay. So I am going to discuss the agriculture produce concept. So one of the student is asking, sir, Shruti is asking, अगर एक mango tree हो, not many, then also the mango will be covered here. Yes. This is a company, Nestle India Limited. Have you heard about Nestle India Limited? Nestle India Limited has a mango orchard. They have mango garden. They have a mango tree. Okay. This is a mango tree. This mango tree is a bearer plant. It is covered under Ind AS 16, property, plant and equipment. But these mangoes are the agriculture produce. It is covered under Ind AS 41. On 31st July 2021, the company has plugged 100 kgs of mangoes. The company has plugged 100 kgs of mangoes. Mangoes are agriculture produce to be covered under Ind AS 41. Mangoes are agriculture produce to be covered under Ind AS 41. That is very much clear. Okay. Now this company has plugged 100 kgs of mangoes. The company has a raw material. The company has an asset. Now the question arises, how to account for these mangoes which are there with the company? So friends, just to give you a view, Ind AS 41 says that the biological asset and agriculture produce has to be accounted on the basis of fair value less cost to sell. On the basis of fair value less cost to sell. Okay. For example, the fair value of these mangoes are 50 rupees per kg in the market. But if you will go to sell these mangoes, you have to incur a cost to sell of 5 rupees. For example, transportation cost. For example, for selling these mangoes in the market, you have to pay some commission of X rupees. So let's say the fair value of the mangoes are 50 rupees per kg and cost to sell, transportation, commission, etc., it will cost you 10%, which is 5 rupees per kg. So then what is my fair value less cost to sell? My fair value less cost to sell is 45 rupees per kg. Okay. This is my fair value. This is my not my cost. This is my fair value. Because this one mango tree will give you mangoes for so many years, for 20 year, 30 year, 40 year. And in every season, this mango tree will give you a mango of 500 kg, 1000 kg, 100 kg, right? So what is the cost? The cost is very nominal. भाई कॉस्ट क्या होगी? ट्री को मेंटेन करने की कॉस्ट होगी ना. Okay. So the cost will be very nominal. The cost comes out could be 50 paisa per kg, 1 rupees per kg could be the cost. That is not a right picture. So that is why this Ind AS 41 says that you have to recognize your biological asset and agriculture produce at fair value less cost to sell. At fair value less cost to sell. Okay. Okay, sir. So on 31st July, when this company has harvested, plugged 100 kg of mango, then this company has to make a first accounting entry. What is the first accounting entry? Agriculture produce asset account debit. Agriculture produce account debit. Agriculture produce account debit to other income account. Sir, why other income? Because the company has not actually paid any money to bring these mangoes. कंपनी ने कोई पे नहीं किया. It is a fair value. So agriculture produce account debit to other income account. So Nestle, this company has plugged 100 kgs of mangoes. Now what this company will do? This company will manufacture jams, sauces, chutneys, pickles, soft drinks, etc., etc. Yeah. Nestle क्या करेगी? Nestle will manufacture jams, sauces, chutney, pickles, soft drink, toffees, etc., etc. Right. So this company Nestle will plug these mango and put these mangoes in cold storage. So this mangoes will become inventory for the company. ये रॉ मटेरियल होगा ना. अगर इनके पास अपने मैंगो गार्डन नहीं होते, मैंगो ऑर्चर्ड नहीं होते, तो क्या करती? मार्केट से रॉ मटेरियल परचेज करती. एंड व्हाट इज द रॉ मटेरियल? Mango are the raw material for this company. So friends, this standard says that agriculture produce at the point of harvest has to be covered under Ind AS 41. After that Ind AS 41 will not be applicable. After that, other standard will be applicable like inventory. So immediately on 31st July, the first accounting entry will be agriculture produce account debit to other income account. Immediately the second entry has to be passed on inventory raw material account debit to agriculture produce account. So you can see this agriculture produce has been credited, which was debited in the first entry. So this agriculture produce account has been knocked off. The resultant entry will be the inventory account debit to other income account. So friends, the moment this standard was talking about, this standard is applicable to agriculture produce only at the point of harvest. It means that this standard is only applicable for the first entry on 31st July 2021, where when you are harvesting, when you are detaching, when you are plucking some agriculture produce from the biological asset, then only at that point of time you need to recognize agriculture produce. You need to measure agriculture produce on the basis of fair value less cost to sell, and you need to pass an accounting entry. You need to recognize. Immediately, the next entry will be this agriculture produce will be credited and inventory is going to be debited, right? This is how this accounting has to happen. Sir, for example, on 31st July 2021, we understood, for example, Nestle will not use these mangoes till 31st March 2022 on the reporting date. Sir, in that case, what will happen? I think on 31st March 2022, this will be an inventory in the books of Nestle. Inventory as a raw material. And inventory has to be measured at cost or NRV, whichever is lower. If it is a raw material, it has to be measured at cost. Right? There is no Ind AS 41 accounting. There is a Ind AS 2 inventory accounting. Is that clear to everyone? Is that clear to everyone? Huh? Is that clear to everyone? Agriculture produce means for the first time when the output is detaching from the biological asset. If you are processing mangoes, it is not your agricultural activity, because once you plug the mango, right, you have made the accounting entry, you have made the accounting, your Ind AS 41 is over. Okay. So when you are processing these mangoes, in that case, It will be an inventory accounting. It will not be a Ind AS 41 accounting. Okay, guys, let's move on and go back to the presentation. Now, just to summarize, sir, agriculture produce up to the point of harvest we understood. Government grant we understood. Please summarize biological asset. Okay. As I told, biological asset, as I told you guys, the biological asset is living animal or plant. Either it is a living animal or plant. Right? Living animal part is very much clear. If this living animal is related to agricultural activity, it is covered under Ind AS 41. If this living animal is related to non-agricultural activity like circus, like weddings, like other commercial transportation, other commercial activity, it is not related to Ind AS 41, it is related to Ind AS 16. For plant, the plant could be bearer plant could be non-bearer plant, right? Sir, what is meant by bearer plant? Bearer plant means plant which provide agriculture produce for more than 1 year, right? Like apple, mango, rubber, tea, coffee, tendu tree, right? So these are known as a bearer plant which provides the agriculture and which provide the vegetable and fruits for more than 1 year. So bearer plant is covered under Ind AS 16. If it is a non-bearer plant like tomato, carrot, potato, all these vegetables, rice, wheat, paddy, maize, cotton, right? These are known as a non-bearer plant which provides agriculture produce within a year for less than a year in 1 season, 2 season. So these are known as a non-bearer plant. So these non-bearer plant are covered under Ind AS 41. Bearer plant are covered under Ind AS 16. So just to summarize, biological assets are covered under Ind AS 41 when it relates to agricultural activity. For living animal, if animal is related to agricultural activity, it is covered under Ind AS 41. If it is not related to agricultural activity, it is covered under Ind AS 16. For plant, if it is a bearer plant, it is covered under Ind AS 16. If it is a non-bearer plant, it is covered under Ind AS 41. Sir, what about agriculture produce? Agriculture produce after agriculture produce at the point of harvest will always be covered under Ind AS 41. Okay, clear? Is that clear? Now I have some examples from the standard. And these are the examples of, the life cycle of this biological asset, agriculture produce, and products that are result of processing after harvest. Sheep, it is a biological asset. The agriculture produces wool. When you are just breeding this wool from sheep, it is a agriculture produce. And what is the final output from this processing of wool? It is a yarn, carpet, woolen clothes. It is an inventory. Trees in a timber plantation. Trees in a timber plantation. It's a biological asset. The felled tree logs. The felled tree logs are the agriculture produce. Right. The lumber. Lumber means when you are cutting the felled tree logs for the purpose of manufacturing furniture. It is known as a lumber. Okay. It is a inventory. Dairy cattle. Cow, buffalo, goat. It is a biological asset. Milk is agriculture produce. Cheese, butter, it is an inventory, right? Sugarcane, again, biological asset. Tea bushes, biological asset. Grape vines, biological asset. Tobacco plant, biological asset. Rubber tree, although these are the bearer plant, but of course, biological asset, these are the, okay? But these are the bearer plant. The harvested cane, picked leaves, picked grapes, picked leaves, harvested latex, these are the agriculture produce. And these are the final product inventory. So this is just for your information. Okay. Okay, friends. Biological asset is a living animal or plant, as I discussed you. Agriculture produce is the harvested produce of the entity's biological asset. Milk from cow is a agriculture produce at the point of harvest. Mango tree from the mango is a agriculture produce at the point of harvest. Harvest means detaching something from a biological asset. Agricultural activity involves biological transformation and harvest of biological assets for sale, for conversion into agriculture produce, or for conversion into additional biological asset. Just a definition, not very relevant. Agriculture activity covers a diverse range of activity like raising livestock, forestry, annual or perennial cropping, like rice, maize, wheat, cotton, cultivating orchards and plantation, floriculture, aquaculture, animal husbandry, poultry farming, fishing, milking, dairy farming. These are the agricultural activity example, right? Not very relevant from the exam purposes, just for the knowledge purposes, right? Not relevant from the exam purpose. Biological transformation. This standard sometimes use the word biological transformation. So what is meant by biological transformation? It includes biological transformation includes four parts. It includes growth. For example, there is a cow. So earlier it was a calf. Now calf becomes a cow. So an increase in quantity or improvement in the quality of an animal is known as a growth. Degeneration. Degeneration. When this cow got died, okay, or this cow has stopped providing the agriculture produce, it is known as a degeneration. Production. When the cow is giving a milk, right, it is known as a production. Procreation. When the cow gives birth to a calf, it is a procreation. So biological transformation is like a qualitative or quantitative change in a biological asset, right? It includes growth, production, procreation, and degeneration, right? Again, it's a theoretical part. You just need to know about this. Fair value definition is covered under Ind AS 113. Cost to sell means the cost which is directly attributable to sell the asset. Bearer plant definition is covered under Ind AS 16. So bearer plant are those living plant which is used in the production or supply of agricultural produce and is expected to bear agriculture produce for more than 1 year and has a remote likelihood of being sold as agricultural produce except for incidental scrap. Forget about this definition. Simple, remember the definition. Bearer plant are those living plant which are expected to provide the agriculture produce for more than 1 year. This is the bearer plant. Okay. So friends, these were the definitions. Coming to the again this illustration number 1. ABC Limited grows wines. Wines. ABC grows wines means grape wines. Okay. Grape plant. Harvest the grapes and produces wine. Which of these activities are in the scope of Ind AS 41? First of all, this grape wines. Okay. Grape wines means grape tree. This grape wine is covered under Ind AS 16 because it's a bearer plant. This grape plant will provide the grapes for more than 1 year. This is a bearer plant, right? This is covered under Ind AS 16. When the company is plucking these grapes, when this company is plucking these grapes, it becomes an agriculture produce. It is covered under Ind AS 41. When the company, after plucking these grapes, it becomes an raw material. It becomes a raw material, right? It becomes a raw material. If the company just keeping these grapes for the purpose of producing a wine, it becomes your raw material after point of harvest. The second accounting entry. And when the company processed and manufacture wine, it becomes a finished goods, right? So this will become an inventory. So this raw material and finished goods both are inventory. So this is the life cycle of this entire accounting, right? The tree is Ind AS 16 bearer plant. The agriculture produce at the first place is agriculture produce at the point of harvest is Ind AS 41 activity, and after that it become Ind AS 2. This is how this entire life cycle of biological asset, your agriculture produce is there. Right. So friends, if you have any questions so far, I would be happy to answer. Mansa is asking, sir, what if agriculture produce is finished product for the company? For example, the company is The company is into the business of trading milk, right? So the company is into the dairy business. So the company is milking cow, harvesting the milk and selling the milk. This is what you are saying, Mansa. This is what you are saying. Okay. So let's say instead of milk, let's say there is a company in Kerala, and this company has a coconut tree. This company has a coconut tree as its business, and this company is selling coconuts. The company is harvesting coconut and selling coconut, right? These coconut are the finished product for this company. The coconut lying on the tree, the company plucked the coconut and selling the coconut, right? You must have seen on the highways, right? And I still remember 3 years back when I was traveling from Delhi to Haryana, right? I was going to Bhiwani. So there is a highway, and near to highway, there were some guava, अमरूद होता है ना, guava. So there was a orchard, there was a farm where the guavas were there, and a person was sitting outside who was selling guavas, right? So when I stopped my car and I asked him that you are selling guavas, he said yes. You will get the fresh guavas, and I'll pluck from the tree and I'll sell it to you, right? So these guavas are the final product for him, right? He is plucking and he is selling. In that case, what will happen? This is the question which is raised by Mansa. So nothing will happen. When he will pluck the agriculture produce, it is a agriculture produce at the point of harvest as per Ind AS 41, right? For example, 100 kg guavas he has plucked. So he will recognize this guavas, the first accounting entry, agriculture produce account debit to other income. 10 rupee kg is the fair value less cost to sell. So agriculture produce account debit to other income 10 rupees for 1 kg. Immediately the next accounting entry, inventory account debit to agriculture produce account, same value. Then the third accounting entry, when the company is selling the guavas, bank account debit to inventory account. That's all. Right? That's all. Clear? So let me again share one of the example, make you guys more clear on this. Example number 2. ABC Private Limited. ABC Private Limited has coconut farms, and they are in the business of selling coconuts. Simple. They are plucking the coconut and selling the coconut. Nothing is there. So whatever is lying on the tree, that is the final product. Draft accounting entries for capturing the below events. Number 1. On 31st August 2021, the company has plucked 1,000 coconuts. On 31st August 2021. On that date, the fair value less cost to sell is 10 rupees per coconut. On 25th September 2021, the company has sold 800 coconuts at the rate of 15 rupees per piece. On 31st March 2022, 200 coconuts are lying in the godown. Simple. On 31st August, 1,000 coconut was plucked. Fair value less cost to sell was 10 rupees per coconut. After 1 month and 25 days, the company has sold 800 coconuts and the selling price is 15 rupees per piece. On 31st March 22 at the reporting date, 200 coconuts are still lying in the godown. You are required to draft accounting entries for capturing the below events. So what is the accounting entry on 31st August 2021? Can you please tell me quickly? What is the accounting entry on 31st August 2021? Agriculture produce account debit to other income, not to bank, to other income. Agriculture produce account debit to other income 1000 kg. 1000 multiplied by 10 rupees. Ind AS 41 accounting will be there. At the point of harvest, you have to debit agriculture produce to other income. On the same date, second accounting entry, Inventory account debit 10,000 rupees to agriculture produce account. This will be Ind AS 2 entry, inventory entry. So this part we have covered. Now on 25th September, the company has sold 800 coconuts at 15 rupees per piece. What is the accounting? Bank account debit. Bank account debit 800 into 15. Cash or cash account debit 800 into 15. Inventory 800 coconut multiply by 10 rupees. Then there is a profit on sale of 4,000 rupees. This is an accounting entry. On 31st March 2021, 2022, 200 coconuts are lying in the godown. So at what value it is going to be recognized? Cost or NRV, whichever is lower. Cost is lower, 10 rupees. So balance in inventory is 200 multiplied by 10, 2,000 rupees. So this is how this entire event has been captured. I believe now you guys have well understood the accounting in case of agriculture. Niveta is asking, sir, inventories are measured at cost or NRV, whichever is lower. How conversion from Ind AS 41 to Ind AS 2 happens? First of all, Niveta, this inventory are measured at cost or NRV at the reporting date. At the initial recognition, inventories are measured at cost. At the initial recognition, inventories are measured at cost. Okay. So the moment when this agriculture produce Ind AS 41 is converting into inventory, it is at the same value. Like in the earlier example which I have taken, if you can see, the first entry was agriculture produced to other income 45 rupees. The second entry was same, inventory to agriculture produce at the same value, 45 rupees. Here also, if you will see, the first entry agriculture produced to other income 10,000 rupees, inventory to agriculture produce 10,000 rupees. So at the initial recognition, it is measured at cost. What is the cost? Cost is the value of the agriculture produce. What is the value of the agriculture produce? It is fair value as cost to sell. Right? Sir, what happens if this value of inventory has gone down on the reporting date from 10 rupees, it will become 8 rupees. In that case, I have to take an impairment hit of 2 rupees. I have to take an impairment hit of 2 rupees. Right? Is that clear? Shruti is asking, sir, for farmers, it won't be inventory if 1 or 2 mango trees there. Shruti, don't go by the quantity. Go by the logic. Tell me one thing. If a company is selling 1 or 2 cars, the company is purchasing 1 car and selling car, then buying 1 car, selling car. So the company is into the business of cars. If the company is selling 1,000 cars, the company is in the business of cars. So the accounting does not depend on the quantity, right? You need to understand, for example, if that farmer is a company, right? A milkman, whether a milkman applies Ind AS 41 accounting, answer is no. Because Ind AS is not applicable to non-corporate entity, it is not applicable to individual. But whether Amul Dairy Limited, Parag Milk and Food Limited, have you heard about Parag? Have you heard about Parag Milk? Right? But whether Parag Milk and Food Limited, whether these companies are applying Ind AS, yes, these are listed companies. These companies are into the agricultural activity. These companies are into the business of milking, dairy business, right? So it comes under agricultural activity, and these companies are applying Ind AS 41. Okay. So first of all, you need to understand, if Ind AS 41 is applicable, then what is the accounting and reporting? It does not goes by quantity. If you purchased 1 car, 1 building, you will capitalize that building, capitalize that car as a property, plant and equipment in your books of accounts. If you will buy 100 cars for your business, 100 buildings for your business, it will also be capitalized as a PP, right? So you need to understand how this accounting is happening. We are discussing Ind AS 41. Ind AS 41 is applicable on 3 parts. It applies to biological asset. It applies to agriculture produce at the point of harvest. It applies to government grant, which is related to agricultural activity, right? So for biological asset, we discussed the biological asset are of two types, animal and plant. Animal, if related to agricultural activity, will cover here. Otherwise, it will cover under the different standard. Plant, if it is bearer plant, it will cover under Ind AS 16. Non-bearer plant, cover under Ind AS 41. Agriculture produce means the output of that bearer plant, output of that animal, it has to be as per Ind AS 41, right? But when? It has to be as per Ind AS 41 at the point of harvest. Sir, what happens? What happens even after that? So immediately after harvesting, it will become an inventory, right? And how this inventory is recognized? The closing value, I mean to say the value of agricultural produce will become the opening value of the inventory, right? So what is the, how this agriculture produce is getting valued? It is getting valued at fair value less cost to sell. Okay, here, shall I move forward? Not. Okay, okay, let's go to the presentation again. Now I am getting into the accounting part, recognition first. Friends, like PPE we have discussed, PPE is going to be recognized when future economic benefit is probable and cost can be measured reliably. Same we have discussed with intangible asset. In intangible asset, there were three conditions for recognition of intangible asset. Future economic benefits should be probable, cost can be measured reliably, and it meet the definition of intangible asset. Right? So friends, investment property, it says that investment property is recognized as an asset when future economic benefit is probable and cost can be measured reliably. Even in a case of agricultural asset, means biological asset or agriculture produce, the two conditions are same. Future economic benefits should be probable, right? Future economic benefits should be probable. And in this particular standard, the word only cost is not there. Cost can be measured reliably is not there. The fair value can be measured reliably. Fair value oblique cost can be measured reliably. Because we are dealing with a sector where the cost may not be measured reliably. How can you measure cost? You got 1000 kg of apple, right? You got, let's say in a year, you are getting 20 kg of milk every day from a cow. So in a month, you are getting 600 kg of milk. You are getting 7200 kg of milk in a year. How can you measure the cost? The cost cannot be measured reliably. How can you measure the per unit cost of that milk? Per kg apple cost? It cannot be measured reliably, right? But fair value can be measured reliably. You are aware that in the market, the fair value is 70 rupees per kg of milk. The fair value of the apple is 100 rupees per kg of apple. So that is why this standard touches the fair value or cost can be measured reliably. Other standard only talking about cost can be measured reliably. The kind of item with which this standard is dealing, it has also covered fair value can be measured reliably as a part of the recognition condition. Right? Have you understood this? Have you understood this? Have you understood or not understood? Okay. So future economic benefits should be probable, cost or fair value can be measured reliably. But kind of the asset it deals with, the very important condition for recognition of a biological asset and agriculture produces control. The entity should control the asset. The entity should control the asset. And why it is important? So control is very important. Let me give you an example, real life example. There was a company, and outside the gate of a company, a street dog was always sitting there, always sitting. Now the company is feeding the milk and bread to that street dog, right? So every day the watchman is giving the milk and bread to the street dog, right? And he was behaving like a pet. So what happens? This dog was ensuring that no trespasser will enter into this company. This dog was behaving like a security guard. He was behaving like a watchman. Now the question is whether the future economic benefit is probable. Answer is yes, because this dog is safeguarding the company. This dog is behaving like a security guard. This dog is safeguarding the company so that the trespassers will not be entered. Okay, unaccess authorization will not be there. So whether fair value or cost can be measured reliably, fair value, yes. The fair value of the dog. Of course, there is a market for everything. There is a veterinary market also. There is an animal market also where the experts can value that animal. Okay. So fair value can be measured with the help of the valuers. Okay. And there are animal valuers also. There is an animal market also. Now the question is, future economic benefit is probable, fair value can be measured reliably. The point is, tomorrow, if the municipality dog catcher van will come and they will catch these dogs, right? And they want to take these dogs to the dog shelter. Can this company stop this municipality van to catch these dogs? Yeah. Can the municipality van come and can the company stop this municipality van to catch these dogs? Do the company control this dog? Answer is no. Answer is no. Right? Answer is no. Right? Why? Because the company is not controlling the dog. Guys, I'm just giving you the example so that it will get set in your mind. Okay. So understood the substance or intent of this example. So the company is not controlling this dog. Since the company is not controlling, irrespective of the fact the company has a future economic benefit, the company can measure reliably the fair value. Still, this cannot be capitalized as a biological asset under Ind AS 41. Right? Cannot. But with the same thing, if the company would have purchased the German Shepherd or Doberman, let's say, right? The company has purchased the dog. In that case, what will happen? The company can capitalize. Why? Because the company controls. Why? Because the company has acquired, the company has purchased. Right? The future economic benefit is probable. The cost is measured reliably. The entity controls the asset and hence this can be capitalized as a biological asset, right? Because the company is controlling. The third example. This is a land and building of the company. This is a company's A premises. This is company A premises. Okay. And this plot belongs to B. This plot belongs to B. This land belongs to B. In B's land, there is a mango tree. In B's land. Right. And this is how this mango tree is there. This is a big mango tree. And 50% of the branches of this mango tree is tilting towards the premise of company A. And in every year, this company got, let's say, 500 kgs of mangoes every year, every season. The company plugged 500 kgs of mangoes from the branches which is tilting towards the company premises, right? Every year. 500 kgs of mangoes. Now the question is, whether the future economic benefit is probable. Answer is yes. 500 kgs of mangoes are there and the company is using this mango as a raw material. Right. Whether fair value or cost can be measured reliably. Answer is yes. Because the company is purchasing these mangoes. These mangoes are sold in the market, so fair value is known. Okay. But the question is, can the company capitalize this mango as an inventory or as an agriculture produce? Can the company control this mango tree? Can the company control this mangoes and mango tree? If tomorrow the owner will come and the owner will cut the branches which is tilting towards this company A, can the company stop him to not to cut these branches? Can the company stop him? Yeah? Answer is no. Answer is no. Company cannot stop him. In that case, can this company recognize this 500 kgs of mangoes as an agriculture produce? Answer is no. Why? Because the control is not there with the company. The control is missing. And that is why this cannot be capitalized as an agriculture produce. This cannot be capitalized as an agriculture produce. Okay. This cannot be capitalized as an agriculture produce. I hope it is clear to everyone. I hope it is clear to everyone. Right? So this is what we have discussed on the recognition of a biological asset or agricultural produce, right? So a biological asset or agricultural produce under Ind AS 41 will be recognized only when the future economic benefit will be probable, fair value or cost can be measured reliably, and entity controls the asset. An entity controls the asset. Okay. Now we'll discuss the measurement part. We'll discuss the recognition part. We'll discuss the measurement part. Now, how this biological asset and agriculture, there are only two assets. You understood? One is biological asset, one is agriculture produce. So biological asset, right? And the second one is agriculture produce. So biological asset, for example, cow, sheep, goat. So biological asset has to be measured initially at the time of initial recognition and has to be measured subsequently on the reporting date, right? So standard says that biological asset has to be measured initially as well as subsequently on the basis of fair value less cost to sell. On the basis of fair value less cost to sell, right? For example, the initial fair value at the time of initial recognition, for example, the value of the cow is 100 rupees, it has to be recognized at 100 rupees. Subsequently, it become 150. So you have to recognize subsequently on 150, and this 50 rupees will go to the profit and loss as a gains and losses, right? Fair value gains and losses. It will go to the profit or loss. So simple, very simple. Biological assets are initially and subsequently measured at fair value less cost to sell. What about agriculture produce? Agriculture produce are initially recognized. Mangoes are initially recognized and measured at fair value less cost to sell. What about subsequent measurement for agriculture produce? What about subsequent measurement for agriculture produce? I am waiting for your answer. What about subsequent measurement for agriculture produce? Biological assets are initially and subsequently measured at fair value less cost to sell. What about subsequent measurement of agriculture produce? Agriculture produce are also measured initially at fair value less cost to sell. Subsequently, agriculture produce are also measured at fair value less cost to sell. I'm waiting for the answer. I just want to see how many students are concentrating on this question. Yes, Nivetha has given a very right answer, and even Pradeep has given a right answer. So it is no more Ind AS 41. Why? Because agriculture produce are initially measured as per Ind AS 41, then immediately it becomes Ind AS 2 inventory standard. Immediately, right? So there is no subsequent measurement as per Ind AS 41. Subsequently, it has to be measured as per inventory, right? Very good, Tanisha. So Tanisha has written subsequent measurement is at cost or NRV since they are immediately recognized as an inventory. Very good. Yukta has also given a right answer. Only till harvest, this Ind AS is applicable, sir. Great, guys. So this is what I was expecting from each one of you. A big round of applause for Pradeep, Nivetha, Mansa, Tanisha, and Yukta. Very good. Great. So Tanisha, I have also quoted you. Not to worry. Yes, and even Jigar and Yedu Kondalu has also given the right answer. Great, guys. Okay. So biological assets are initially and subsequently measured at fair value less cost to sell, and agriculture produce are initially recognized at fair value less cost to sell, but subsequently there is no measurement of agriculture produce. Why? Because it becomes an inventory, and the changes in fair value less cost to sell will go to P&L, right? So you can see that measurement of agriculture produce. You can see it is measured at fair value less cost to sell at the time of initial recognition when it is harvested. The fair value measurement of agricultural produce at the point of harvest is the cost of the produce for subsequent accounting as per Ind AS 2 or other applicable standard. Right? Clear, friends? Is that clear? So let's discuss illustration number 2, measurement part. A farmer owned a dairy herd of 3 years old cattle as at 1st April 2001 with a fair value of 13,750, and the number of cattle in the herd was 250. So the total fair value of the herd means Jhund. The total fair value of the herd of this 3-year-old dairy cattle was 13,750, and the number of cattle was 250. So 13,750 divided by 250. What is the value? 13,750 divided by 250. What is the value? If you will divide 13,750 divided by 250, what is the value which comes as? Can you please let me know the value? So 13,750 is the total value, 250 is the quantity. So per unit, per kettle value is 55 rupees. Per kettle value is 55 rupees, right? The fair value of 3 years cattle as at 31st March 2002 was rupees 60 per kettle. So initially it was 55 rupees per kettle. Now it becomes 60 rupees per kettle. The fair value of the 4-year cattle. See, on 1st April 2001, what was the age of these cattle? The age of these cattle was 3 years old, right? After 1 year, 31st March 2002, what is the age of these cattle? They become 4 years old. They become 4-year-old. So when they grow, their value will also grow. When they will grow, their value will also grow. So on 31st March, on 1st April, the price of per kettle was 55 rupees, which are 3 years old. On 31st March 2002, the price of 3-year-old cattle is 60 rupees. The price of 4-year-old cattle is 75 rupees. Now the first question to all of you, right? You know that the quantity is 250. 55 rupee was the initial value of 3-year-old cattle. In this question, what is the closing fair value? Will you take 60 rupees or will you take 75 rupees? Calculate the measurement of the group of cattle as at 31st March 2002, stating price and physical change. So that I'll discuss separately, but please let me know whether you will take 60 rupees or you will take 75 rupees for the valuation. Anisha is saying she will take 4-year-old. Ridhima, Neha, and Rahul has also given the right answer. Sir, we will take 75 rupees. Okay. Okay. Yes. Why a 4-year? Because see, these are the living animal. So earlier it was 3-year, now it become 4-year. So you have to see the fair value from the 4-year perspective. right? So of course you need to take 75 rupees. From 55 rupees, it becomes 75 rupees. There is a 20 rupees of gain in the fair valuation of these cattle, which will go to the P&L. Now, if I will discuss, I will ask what is the actual price change and what is the value which has to be allocated to the physical change. If I will ask this 20 rupee increase, you need to bifurcate between the actual increase in fair value and between the increase due to the biological transformation. So let's say if the cattle was 3 years old only, what is the value? 60 rupees. It means from 55 it becomes 60. It means the 5 rupee pertains to the actual increase in fair value. Actual increase in fair value. But 15 rupees from 60 to 75, 15 rupee pertains to the increase in fair value due to biological transformation. So the price change is 5 rupees, 55 to 60, and 15 rupees pertains to biological transformation. Okay, from 3 year to 4 year. Have you understood this? So price change is 55 to 60. Physical change is 60 to 75. So in your examination, this kind of question may ask, right? So this is how you need to give the answer. Simple. Fair value on 1st April 2001 was 13,750. The price change 3 year to 3 year, it is 55 to 60. It is 1250. The physical change means biological transformation. It is 3750. The total fair value is 18,750 as on date. This is 55. This is 75. Right? Yeah, guys. Is that clear? Reporting of gains and losses. Where these gains and losses will go? These gains and losses will go to the P&L. Right? So I'll discuss these gains and losses and the other part with the help of a real life example in Excel file. So friends, I hope you have understood it very well. We discussed the recognition part, discussed the measurement part, right? So now let's have a 6 minutes break. It's 8:29. We will start at 8:35. Okay. And then I'll keep this session forward for the next 2, 3 concepts. Okay. So let's have a 6 minutes break. well aware, and now you have understood the recognition, measurement, these all aspects of Ind AS 41, right? So friends, let me discuss. So let me discuss this accounting, this measurement accounting on Excel file, and please confirm once my Excel file is visible. Please confirm once my Excel file is visible. Then I'll show you the real life annual report. Okay. So that you will be able to relate these concepts with the help of annual report. I'll cover that annual report part also. Please confirm if my Excel file is visible. Is that visible? Yeah. Okay. Just give me a minute. Yeah. Okay. Okay. So with the help of this Excel, I'll summarize this entire measurement concept, and I'll also discuss this measurement concept with the help of two, three situations. Right. These accounting entry will clear everything here. For example, on 1st July 2021, a company has acquired a biological asset. A company has purchased a cow for rupees 10,000, right? So what is the accounting entry when the company will purchase a cow? Biological asset account debit to bank account to cash account, right? But the point is, the cost is rupees 10,000, right? The cost is rupees 10,000. And standard says that the initial and subsequent measurement of biological asset has to be at cost or fair value less cost to sell. What is the initial measurement of biological asset? Is it at cost or is it at fair value less cost to sell? Is it at cost or is it at fair value less cost to sell? Yes, it is at fair value less cost to sell. You all are right. The initial measurement of biological asset is at fair value less cost to sell. If the company has purchased, if the company has purchased this asset, this cow at 10,000 rupees, what is the fair value? I'm asking the fair value. The fair value, the market value, it will be 10,000 rupees only. It will be 10,000 rupees only. But what is the cost to sell? For example, if I have purchased a cow right now at 10,000 rupees, of course, 10,000 rupees the cost, 10,000 rupees the fair value. But if I need to sell this cow immediately, if I need to sell this cow immediately, of course, I would be able to sell at 10,000 rupees. But there are some costs which are attached due to selling this cow. There are some cost which is attached due to selling this cow. What is the cost to sell? For example, if I need to sell this cow right now, I have to pay some transportation cost. I have to pay some commission. I have to incur some carries outward cost, right? So let's say the fair value is 10,000, which is very much clear. But I have to incur some cost to sell for selling this cow, and assuming the cost to sell is 1,000 rupees. So what is my fair value less cost to sell? My fair value less cost to sell is 9,000 rupees. Are you all agree with me? Are you all agree with me? The fair value less cost to sell in this case is 9,000 rupees, assuming the cost to sell would be 1,000 rupees. Yeah. So in that case, friends, I have paid 10,000 rupees. So the accounting entry will be to cash 10,000 rupees. This is very much clear. Biological asset has to be measured at fair value less cost to sell. It is 9,000 rupees. Where the difference 1,000 rupee will go? This will go loss on initial recognition. So this is a kind of a standard. This is a unique standard where loss will happen even at the time of initial recognition. Why? Because of this cost to sell element. Because of this cost to sell element, right? So you are not required to recognize it at cost. you are required to recognize it at fair value less cost to sell. Now you must have a question, sir. If the company has purchased this cow, then why biological asset? Then why you are recognizing it at fair value less cost to sell? Why you are not recognizing it at cost? Number one, standard says this. That is why we are doing this. But what could be the rationale behind saying that everything has to be accounted for at a fair value less cost to sell? Because when you talk about standard, when these standards are getting drafted, the standards are getting drafted by having a bigger vision in mind, right? By looking at the entire consistency principles for the industry. Consistency principle for the industry. For example, this is a biological asset. This is a cow. I have purchased a cow. If I will measure it at cost, which is 10,000 rupees, tomorrow my competitor, which is into a different company in the same industry, he has not purchased the cow. He got the cow as a gift. Or the third person who has not purchased the cow, does not have the cow as a gift, but the third person has got the cow as a part of reproduction because the mother cow has given birth to a calf, right? So he got the cow. Now the question arises, the person who has purchased the cow will recognize at 10,000 rupees. The person who got the cow as a gift recognize at 0 rupees. The person who has got this cow as a reproduction process, means the mother cow has given birth to a calf, so he will recognize at fair value less cost to sell, probably. So these three companies have a different three values, but the asset is same. The asset is same almost. Let's say everyone has purchased or gifted a calf, got a calf as a gift. So that is why standard says that in these kind of asset, in biological asset, doesn't matter you purchase, you don't purchase, you have to initially and subsequently measure at fair value less cost to sell. Simple. To maintain a consistency principle across the industry dealing in this Ind AS 41. I hope it is clear to everyone. Yes, Shruti, Mansa, Nisha, Neha, Rahul, Viraj. I hope it is clear to everyone. Very good. Now, on 1st July 21, we have done that. Now, on 31st March 22, a fair value less cost to sell on this biological asset becomes 9,500. Now, subsequent measurement on 31st March 22, it has to be at fair value less cost to sell. But now the value has increased by 500 rupees. What is the accounting entry? Biological asset account debit to other income account 500 rupees. So the initial measurement and subsequent measurement is at fair value. The changes in fair value, like at the time of initial recognition, there is a loss due to this cost to sell. So it will go to the loss, the P&L. At the time of subsequent recognition, there is an income. Why? Because there is an increase in fair value less cost to sell. So it will go to the other income. Had this been a decrease in the fair value less cost to sell, it will go to the P&L as a loss. Okay. So it will be other expenses or loss on fair value measurement account debit to biological asset. Now the second situation, cow has given birth to a calf. And the fair value less cost to sell of calf is 1,000 rupees. What is the accounting entry? Biological asset calf account debit to other income. Right? Now the third accounting entry, end of the life of biological asset. The biological asset, this calf was not able to survive. This calf got died. What is the accounting entry? Loss on derecognition account debit to biological asset. Right? The company has sold the residual of the dead biological asset. A died calf has sold out at 200 rupees. This is the accounting entry, cash account debit to other income. Or alternatively, what could be the accounting entry at the time of derecognition? Cash account debit 200 rupees, loss on derecognition 800 rupees, to biological asset 1,000 rupees. To biological asset 1,000 rupees. Right? Is that clear, friends? Can you please confirm whether all these accounting entries are clear to all of you? At the time of initial measurement and recognition, at the time of subsequent measurement, at the time of birth or reproduction of a biological asset, at the time of derecognition of a biological asset, whether these accounting entries are clear to all of you? Yes or no? Guys, yes or no? I need to have an answer. Yes? Very good. Great. Now let me show you annual report of Parag Milk and Food Limited. Please confirm this Parag Milk and Food Limited annual report is visible. Parag Milk and Food Limited annual report. Is it visible? Yes. This annual report is visible. So I'll show you the entire presentation, recognition, accounting policy, measurement of this entity, Parag Milk and Food Limited. This is the balance sheet. This is the balance sheet. Okay. Yes, Niveta, there is a concept of gain on valuation. This is what I have shown you, na? So at the time of fair value, at the time of reporting date, the fair value has gone up. You have to do the fair valuation at the time of reporting date. If fair value has gone up, you have to recognize that as an income. Right. So the first thing, and please see this balance sheet. So you can see this biological asset other than bearer plant. Note number 6. Right. And what is the value? 505.50 million, 50 crores. 50 crore is the value. Okay. This is the balance sheet where biological asset other than bearer plant has been shown. Now in the P&L, there is a other income also. Note number 28. Please remember note number 6 and note number 28. And the value is 21 crore. Okay. Now let's go to the accounting policy and other stuff. Right. Let's go to the accounting policy. You can see the basis of measurement. The biological assets are measured at fair value. The biological assets are measured at fair value. Okay. Fair value. The concept is fair value. Accounting is happening at fair value less cost to sell. Okay. The cost to sell is getting deducted. Now let's see the measurement. Let's see the accounting policy of biological asset. Let me show you the accounting policy of biological asset. Yes. A biological asset is a living animal or plant. सुना सुना लग रहा है, सुना सुना लग रहा है. Is it something which is heard or is it something which is blank? A biological asset is a living animal or plant. An entity shall recognize recognition condition. A biological asset when and only when the entity control the asset. It is probable that future economic benefit will receive. The fair value or the cost can be measured reliably. Have you heard this concept of recognition condition? Have you heard this concept of recognition condition? Yeah. Okay. Then it says that biological assets shall be measured on initial recognition and at the end of each reporting period at its fair value less cost to sell. Is it something which is heard or is it something which is blank? Heard? Very good. Cost to sell are the incremental cost directly attributable to the disposal of an asset, excluding finance cost and income taxes. Right? A gain or loss arising on initial recognition of a biological asset at fair value less cost to sell. It talks about the initial recognition. You remember? We have purchased this biological asset at 10,000 rupees, but recognized at 9,000 rupees. Why? Because of fair value less cost to sell. So it is written that a gain or loss arising on initial recognition due to fair value less cost to sell and from a change in fair value less cost to sell of a biological asset shall be included in profit or loss for the period in which it arises. It says that initially you have to recognize at fair value less cost to sell. If there is any gain or loss, take it to P&L. Subsequently, again, on the reporting date, you have to measure it at fair value less cost to sell. If there is any gain or loss, you have to take it to the P&L. Biological asset, which is livestock, which is cows in this case, are measured at fair value less cost to sell with any changes therein recognized in statement of profit and loss. Right? So now let's move to the note number 6 and note number 28. Please remember balance sheet breakup and P&L breakup. Okay. Note number 6. Biological assets other than bearer plant, livestock, cows. Opening balance 40 crores, 402.60. Less decrease due to sale or disposal. Either the biological asset got died or the company has sold biological assets. 17 million, 1.7 crore. Add or less change in fair value less cost to sell. Change in fair value less cost to sell. There is an increase in fair value less cost to sell by 12 crores, 120 million. And the closing value is 50 crore. That is what is there in the balance sheet. And there is a remarks also. It represents the change in price as well as change on account of biological transformation, price change and physical change. Why this 12 crore of fair value has been increased? Of course, due to inflation, because the price has been increased. Second, there were some calves. There were some calves which were like a calf, immature cows in the last year. Now they become mature cows. They started giving the milk. And that is why their price has been increased due to the biological transformation, due to the physical change. Okay. There have been no new purchase or acquisition of biological asset. The company has not purchased any biological asset during the year, but the count of the biological asset has been increased due to reproduction. Right? Understood? Are you able to relate whatever I've explained to you? Are you able to relate with the help of this annual report of a listed company? Are you able to relate or not able to relate? Please remember this 120.60 million in your mind. And let's go to the other income schedule. Because I have told you that this will go to the other income, right? This is the schedule of other income. And can you see the fair value changes in livestock 120.60 million here? So because the accounting entry is biological asset balance sheet account debit to other income P&L account. So can you see this 120.60 million here? Friends, are you able to relate this concept with the help of this listed company annual report? Are you able to relate this concept? Yes or no? Have you enjoyed this real life example? Right, guys? Okay. So let's go to this annual report once again. There is the annual report. Yes. And let me show you that how many disclosure this company is doing. Biological asset. They have done so many disclosure as well. The subsidiary company's biological asset comprise of livestock, dairy cows. They are also explaining the nature of activity. Livestock is measured at fair value less cost to sell with any changes recognized in the P&L. Right. The subsidiary company's livestock comprise of both mature and immature livestock. So they have bifurcated this livestock biological asset into three parts. immature cows, mature cows, and other cows, right? So immature cows, they have explained. Immature cows are those cows who are just like a calves, who are not giving milk. Mature cows are those cows who are giving milk and ready for the reproduction. Other cows are those which are facing the dry phase of their life cycle, like old cows. And they have given the head count. They have given the head count also. You can see last year it was 2394, but this year it is 2611. You will be surprised to see, as I have shown you in the balance sheet note number 6, they have written that they have not purchased any cows during the year, but still the number has increased. How come this number has increased? Because these mother cows has given birth to the calves which become cows now. Okay. Then they have also given that what is the total production of agriculture produce. The total production of the agriculture produce is 91,28,936 liter of milk, right? And again, let me take you to the balance sheet. Again, let me take you to the balance sheet, friends. And I just want to have an answer from your side. Please let me know that why agriculture produce is not there in the balance sheet. The inventory is there. You can see the inventory is there, but the agriculture produce is not there in the balance sheet. Why? The biological asset is there. The cow is there, but the milk is not there in the balance sheet as an agriculture produce. Why? Tell me why. Neha has beautifully answered, and thanks Neha for this. Neha has answered that, sir, this milk was agriculture produce when it was extracted from cow, but now it become an inventory. So on the balance sheet date, the agriculture produce does not exist because immediately it has been shifted to inventory. So milk is coming under inventory, not under agriculture produce, right? Because agriculture produce is going to be recognized only at the point of harvest. After that, it will immediately become an inventory. Very good. Thank you. Great. Great answer. Thank you. So even Yedu Kondalu, Manoj, and Nivetha, Pradeep has also given a right answer. Great. So friends, let me again take you back to the PowerPoint presentation. And we have discussed this aspect. This is summary which I have discussed. Quickly, tell me. Abraham purchased a goat for rupees 10,000, for rupees 1,000. This is the cost. He paid 20 rupees carries in cost. He paid 20 rupees as a carries in cost. He estimates that if he wishes to sell the goat, he will have to pay another 20 carries out cost and 25 rupees as a sales commission. How the goat will be measured initially? Tell me, friends. So Abraham purchased a goat for rupees $1,000, and he also paid 20 rupee as a carriage in cost, right? He estimates that if he wishes to sell the goat, he will have to pay another 20 rupees as a carriage out cost and 25 rupee as a sales commission. How the goat will be measured initially? So first of all, tell me, what is the cost to sell? What is the cost to sell? What is the cost to sell? What is the cost which is directly related to sell? So goat is measured at fair value less cost to sell, right? So goat is measured at fair value less cost to sell. What is the fair value? 1,000 rupees. What is the cost to sell? What is the cost to sell? The cost to sell is carries out cost, transportation cost of $20 and $25 of commission. 45 rupees is my cost to sell. So my fair value is 1,000, cost to sell is 45, 955 rupee is my initial recognition. So what is the accounting entry? Got account debit, biological asset account debit 955, 2. Cash account 1000 rupees, 2. Loss on initial recognition 55 rupees. Okay, sorry, 45 rupees. And this carries in cost is also going to be expensed, right? It is also going to be expensed. Okay, because my market value is 1000 rupees. So carries in cost expense account debit to cash account. Okay, is that clear? Abraham's goat has given birth to a baby goat. Estimated fair value the baby goat is 150. He estimates that if he wishes to sell the baby goat, he will have to pay another 20 rupees carries out cost and 25 rupees of sales commission. How the baby goat will be measured initially? Simple. What is the fair value? 150. What is the cost to sell? 20 plus 25. 150 minus 45. The baby goat has to be measured at 105. Accounting entry, biological asset account debit to other income. So cost is measured at 105, right? And gain or loss on initial recognition is 105 only, because he is not paying anything. It is the birth of a baby goat. Understood? Have you understood this thing? Yeah? Is it clear? Clear or clear? Good. Right? So let me discuss the last concept. Then I'll discuss one of the important a comprehensive case study. Then I'll wind up the session. Now the last concept is government grant. Last concept is government grant. Government grant related to the biological asset. Okay. Friends, we discussed the biological asset. We discussed the agriculture produce. Okay. Now let's discuss the concept of government grant for biological asset. So the biological asset government grant. Friends, standard says that if the government grant is received for a biological asset which is measured at, let's say, which is measured at cost, right? In that case, the government grant is not covered under Ind AS 41, it is covered under Ind AS 20. Okay. Friends, what is meant by this? This is meant by when the biological asset will be measured at cost when it is PPE. Otherwise, in Ind AS 41, it has to be measured at fair value less cost to sell. When it is PPE, it has to be measured at cost. And when government grant for biological asset has to be measured at fair value less cost to sell, when it is Ind AS 41. So the government grant for biological asset will be covered under Ind AS 41 if those biological asset is measured at fair value less cost to sell. Or simple, I can say that the biological asset which are covered under Ind AS 41, if the company is getting government grant, that government grant is accounted for as per Ind AS 41. That's all. Now there could be two things about government grant. The government grant could be conditional, the government grant could be unconditional. Let's say if the government grant is unconditional, government is saying that to Parag Milk and Food Limited, that Mr. Parag, I'll give you a government grant of 2 crore rupees because you are maintaining the animal very well. And I have seen that you have more than 2500 cows and I'll give you a grant. Is there any condition? Answer is no. The government is saying that I am giving you 2 crore rupees of grant because you are maintaining the animal and I don't have any further expectation. There is no condition. In that case, as an auditor or as an accountant, what will you suggest to the management? Whether the management, when should the management recognize this government grant in the books of accounts? So this government grant will be recognized in the P&L when it becomes receivable, when the certainty to receive will be there. Sir, when certainty to receive will be there? For example, the government has exchanged some document with the Parag Milk and Food Limited. Government has come up with a notification. In that case, we can say that yes, now the government grant becomes receivable. So when the grant is unconditional, then you need to look at the certainty of receipt, right? But if the grant is conditional, then when you recognize this government grant, in that case, you will recognize the government grant only in the P&L when you are certain that the condition relating to the grant will met. Sir, if the government has already given a grant of 10 crore rupees to a company, right? And the 10 crore rupees has been given that if you will cultivate this land for agriculture purpose, I will give you a government grant of 10 crore rupees. Okay. But you need to cultivate it for a period of 5 years. And government is upfront given a government grant for 10 crore rupees. If the company will not cultivate for 5 years, the government will take the money back from the company. So in that case, even the company has received the money, the company will not recognize this government grant in P&L until and unless the 5-year cultivation condition will met. So what accounting entry the company will make on the first day? Bank account debit to government grant liability account. Okay. But instead of saying that, the government will say that, okay, let's do one thing. I'm giving you upfront 10 crore rupees. And I'm giving you a condition that you have to cultivate this land for agriculture purposes for 5 years. But let's say, whenever you complete each and every year, you will be able to retain the government grant on a pro rata basis. Means, for example, the company has completed 1 year. So the company will have a risk of meeting the condition only for the next 4 years. Means out of 10 crore, the company is not liable to refund 2 crore rupees because 1 year has been completed. When the second year has been completed, the company does not have a risk of refunding 4 crore. The company has to meet only the next 3 years. Understood? If this is kind of a condition, in that case, the money has already been received, the pro rata condition is getting met. So the company needs to recognize this government grant on a pro rata basis. So let me take you on an Excel file and discuss this accounting entry also. Let's say A Limited received a grant of rupees 5 crore instead of 10 crore. In my example, it is 5 crore. With a condition that it needs to cultivate the land for 5 years. If it is not cultivated for entire 5 years, then the grant will become refundable. So what is the accounting entry at the time of receipt? Bank account debit to government grant liability account. And at the end of second, third, fourth year, no entry. At the end of fifth year, this government grant liability will be debited and other income will be credited because the company has met the condition. And what was the condition? The condition was to cultivate for complete 5 years. Unconditional. Now, government is saying that, for example, A Limited has received a grant of rupees 5 crore with a condition that it needs to cultivate the land for 5 years. If the entity will not cultivate in a particular year, then the pro rata grant will be refunded. For example, at the time of receipt of grant, bank account debit to government grant liability account. Right? At the end of first year, when 1 year is completed, government grant liability account debit to other income by 1 crore. Balance liability will be 4 crore. At the end of year 2, again, 1 crore income will be recognized. Balance liability 3 crore. At the end of third year, again, government grant liability to other income. Balance liability 2 crore. At the end of fourth year, the company has not cultivated the land in the fourth year. Now what will happen? No income will be recognized. What is the balance liability? It is 2 crore only. The company has cultivated in the fifth year. In that case, the government grant liability account debit 2 crore. Bank, the company will refund 1 crore to the government pertaining to fourth year and other income credit 1 crore. Right? I hope you guys have well understood this example. Another example, Mool Limited got a government grant of rupees 2 crore for their good work in the health area of the cattle. Unconditional. Simple. So government grant account debit to other income. So Moon Limited got a government grant. So this is bank account debit to other income. Simple. Being government grant received. Second example, the government has confirmed to pay Amul Limited a government grant of rupees 2 crores for the good work in the health area of the kettles. What is the accounting entry? Government grant receivable account debit. In the above example, it was received. In this example, it has not been received. Government grant receivable account debit to other income account. Two crore. Right? 2. Please do let me know if you have any question on this government grant, conditional, unconditional, accounting treatment. Please do let me know if you have any question on the government grant. Please let me know, friends, if you have any question on the government grant. Please do let me know. No question? No question? Very good. Great. Thanks, Rahul. Thanks for such a nice and wonderful feedback. Thank you so much. And friends, let's discuss a comprehensive question, right? On this measurement aspect. This is illustration number 4. This is a comprehensive question. This includes each and every part this government grant of this Ind AS 41. Right. Moon Limited prepare financial statement to 31st March each year. On 1st April 2001, the company carried out the following transactions. Purchase a land for rupees 50 lakhs. Friends, where this land will go in the balance sheet? Where this land will go? Is it a Ind AS 41 asset? Answer is no. You remember, I have told you that the land is not in the scope of Ind AS 41. So this land will go in the balance sheet as a fixed asset, as a property, plant and equipment. So this land will go under balance sheet as a fixed asset. Land account debit to bank account. This land will be the balance sheet item. 50 lakh rupees. Purchased 200 dairy cows. Average age at 1st April 2001 is 2 years. And this company has purchased a dairy cows for rupees 10 lakh. The company has purchased a dairy cows for rupees 10 lakh. Right? So cost is 10 lakh rupees, but the cost is not important. Fair value less cost to sell is important. Right? Fair value less cost to sell is important. But you can say that if the company has purchased the dairy cows, so bank account needs to be credited and biological asset needs to be debited. We will look at the other information further. If the cost to sell related information has not been given, we will assume that the cost is equal to fair value less cost to sell, right? The company has received a grant of rupees 1 million, 10 lakh rupees towards the acquisition of the cows. The grant was non-refundable. So it means the company is not required to comply any condition. The company has received a government grant of 10 lakh rupees. Simple. The company has to make an accounting entry, bank account debit to government grant other income account, right? Bank account, other income account. So this land will go into the balance sheet as a property, plant and equipment. This cows, 200 cows, biological asset account debit to bank account. And this is bank account debit to other income account. Okay. Government grant income. For the year ending 31st March 2002, the company has incurred following cost: 6 lakh rupees to maintain the condition of the animal. Means it is a cost in the P&L expense. This 6 lakh rupees maintenance cost will go to the P&L. 4 lakh rupees as a breeding fee to a local farmer. This breeding fee will also go to the P&L. On 1st October 2001, 100 calves were born. So 200 dairy cows was purchased on 1st April 2001. The average age was 2 years. Okay. On 1st October 2001, 100 calves were born, right? On 1st October 2001. There were no other changes in the number of animals during the year ended 31st March 2002. No changes in the number of animals. Means the opening animal was 200 cows. So it was there plus 100 calves were born. Otherwise, there was no other changes as on the reporting date. Moon Limited has 3000 liter of unsold milk in inventory. There is an inventory also, which is 3000 liter of milk. The milk was sold shortly after the year end at the market prices, and this milk has been sold at the market prices after the year end. Okay. Now there are some more information given. Land value is given 1st April, 1st October, 31st March. Fair value less cost to sale of land is given. But this information is not relevant. Why? Because land is a property, plant and equipment, and it has to be measured at cost or revaluation model. Revaluation model talks about fair value, not fair value less cost to sale. Right? So we will assume that this land will be at cost and this value is relevant. Then newborn calves per calf. Newborn calves fair value is given. On 1st April 2001, not relevant. Why? Because the calves were born on 1st October 2001. So at the time when it was born, the value was 1100. 100 calves. What is the accounting entry? Biological asset calves account debit to other income. 1100 multiplied by 100. 1100 multiplied by 100. Is it clear, friends, or not clear? I hope this thing is clear. Biological asset calf account debit 1100 multiplied by 100. 1,10,000 to other income at the time of birth. The closing value and the closing value of the calves, newborn calves, becomes 1200. Means the price of newborn has increased. But the point is, on the reporting date, now this is no more a newborn. This has become 6 months old. And the 6-month-old calf's fair value is also given. Can you able to relate this example? So now on the reporting date, the fair value of 6-month-old calf is 1300. When it was born, it was 1100. So there is a price change by 100 rupees, 1200 minus 1100. अगर ये न्यूबॉर्न काफ ही होता तो भी 100 रुपए इन्फ्लेशन का इंपैक्ट है, तब भी द फेयर वैल्यू बिकम्स 1200. But since this calf has become 6 months old, so it has become 1300. So the difference between 1100 and 1300, 100 rupees pertains to up to 1200, it pertains to price change. Then 1200 to 1300, it pertains to physical change. It pertains to biological transformation change. Right? Is that clear? 1100 to 1300, is that clear? Coming to this 2-year-old cows. You remember when this company has purchased the cows, they were 2 years old. And it was purchased on 1st April 2001. So these cows, fair value is 5,000. Multiply by 200. It comes out at 10 lakh rupees. So the cost is equal to fair value less cost to sell. Right? There is no change on the day one. But the same 2-year-old cow's value has become 5,200. Means for the same 2-year-old cows, 200 rupee price has been increased. But this is no more 2-year-old. Now it becomes 3-year-old at the end of the reporting date. So from 5,000, it becomes 5,500. So 200 rupee is the price change. 300 rupee is the physical change, biological transformation. Right? Clear? Clear? So this 500 rupees is the change in the fair value. 200 belongs to the price change. 300 belongs to the physical change. And this is the fair value less cost to sell of the milk. This all information is given. Please extract from the balance sheet and statement of profit and loss that would be reflected in the financial statement of the entity for the year ended 31st March 2002. You need to prepare balance sheet extract and the P&L extract. Now let me take you to the Excel file. First of all, my land. This is the balance sheet extract. I hope the Excel is visible. In the property, plant and equipment, I have recognized this land at 50 lakh rupees, assuming the cost model. Right. Now, let's go to one by one the transactions. Let's go one by one. The first accounting entry. On 1st October, the calves were born. On the 1st October, the calves were born. Biological asset calf account debit to other income, 1,10,000. Right? 100 calves were born, 1,100 is the value. So this biological asset calf account debit to other income. So in P&L, this 1,10,000 will go, right? In P&L. Right? 1,10,000. So this 1,10,000 income from the newborn calf. Right? First of all, 1,10,000 on birth. On birth, what is the value? 1,10,000. Second, this 1,100 fair value has become 1,300. Remember, 1,100 become 1,300 for 6 months old. So what is the accounting entry? Biological asset calf account debit to other income, 20,000. So 20,000 subsequently. On birth, it was 1,10,000, 20,000 subsequently. So it become 1,30,000. Or alternatively, you can say that 100 calves were born. The closing value is 1,300. So 1,30,000 is the income from newborn calf, and the closing value of the biological asset calf, 6 months old, is 1,30,000. Is 1,30,000, right? I hope this thing is clear to all of you. Is it clear? Is it clear? Huh? Government grant. The company has received a government grant. What is the accounting entry of government grant? Bank account debit to government grant other income. Simple. So this P&L government grant 10 lakh will be there in the P&L. Government grant 10 lakh will also be there. Right. Then there is a cows which were purchased. The cows were purchased on 1st April 2001. 5,000 was the fair value and number of cow was 200. So 10 lakh rupees. Biological asset account debit to bank account 10 lakh rupees. So there is no change between cost and fair value less cost of sale. Right. So biological asset account debit to bank. Now on the reporting date, this 5,000 becomes 5,500. So 500 rupee have been increased. This is the accounting entry. Biological asset account debit, 200 cows, multiply by 500, 1 lakh. To other income, 1 lakh. What is the, so this 1 lakh will go to the other income. Fair value changes in cow, 1 lakh rupees. And the closing value of the cow, 3-year-old cow, is 11 lakh rupees. I hope it is clear. Now there is a 3,000 liter inventory of milk also. And the value is 24 rupees. So 3,000 multiplied by 24. Agriculture produce milk account debit to other income. 72,000. 72,000. So agriculture produce milk, 72,000. Okay. And this milk will be shown as inventory of 72,000. There are the expenses, maintenance expenses and breeding fees of 6 lakh and 4 lakh. So this will also go to your P&L. So these are the P&L and balance sheet extracts as per this question. Please let me know if you have any question relating to this question. If you have any query relating to this question, I would be happy to answer. Please let me know. Do you have any question? Do you have any question? is clear? No question? Okay, then let's go to this PowerPoint presentation. So the details as per the study material is given this question in the answer itself, and I have also shown it in the Excel file as well with the accounting entries, with the P&L extract, with the balance sheet extract. Disclosures. So I have already shown this disclosure in the Prague Milk and Food annual report. Not much relevant from the CA final perspective. So this is the most important slide for all of you. Thank you slide. And please do let me know if you have any question, right? We would be happy to answer. So friends, in the next 2 minutes, let's summarize. We discussed that Ind AS 41 is applicable on the accounting treatment of agricultural activity. I mean to say recognition, measurement, presentation and disclosure of biological asset, agriculture produce up to the point of harvest, and government grant related to agricultural activity, right? Coming to the biological asset, in terms of biological asset is a living animal or plant. Animals will be covered under Ind AS 41 if it is related to agricultural activity, otherwise not. Coming to the plant, if it is a bearer plant, it will come under Ind AS 16. If it is a non-bearer plant, it comes under Ind AS 41. The agriculture produce up to the point of harvest has to be covered under Ind AS 41. Okay. Coming to the recognition part. So if the future economic benefit is probable, fair value or cost can be measured reliably, or the entity controls the asset, then only biological asset or agriculture produce is required to be recognized in the balance sheet under Ind AS 41, right? Coming to the measurement, biological asset has to be initially and subsequently measured at fair value less cost to sell. Any gain or loss due to the initial recognition or the subsequent measurement has to take it to the P&L as other income or other expenses. Agriculture produce is always required to be recognized at the point of harvest, right? At fair value less cost to sell. Immediately, it has to be reclassified as an inventory or other standard. And that is why there is no question of subsequent measurement of agricultural produce. Government grant, if it is related to Ind AS 41, it will cover under Ind AS 41. If it is unconditional, it has to be recognized in P&L when there is a certainty of receipt. If it is conditional, it has to be recognized only when the condition has been met, right? So this is what we have discussed in Ind AS 41 in a very summarized manner. Thank you so much, friends. I hope you have enjoyed the session. I'll wait for another 30 seconds. If you have any question, I would be happy to answer. If you don't have any question, and I will be happy to conclude the session. So friends, please do let me know if you have any question. I'm just waiting. So Ridhima has confirmed, Neha has confirmed, no questions, sir. Thank you so much. What about others? No question? Okay, great. So thank you so much, friends, and I hope you have enjoyed the session. Thank you so much. Bye-bye. Take care.